Today we'll dive into tariffs and whether or not they are hitting the altcoin market, how this is going to play out for you. We've got a special guest for you, so stay tuned right here. I do want to jump into our sponsor, and that is Tangem. This is where you guys can get into self-custody. Pretty easy to do. If you've never done self-custody, well, this is your chance. It works like a credit card with your phone. It is a physical wallet, so very secure and also simple to set up as well. So just join by going over to tangem.com. You guys can get in right there. Get the 3-card set. It's the best way to kind of start this process and start to move some of your tokens off of centralized exchanges and get started there. All right, guys, I want to bring in a special guest today. But before we do that, I want to jump over to a clip. And this is talking about crypto in general and where we are in this current cycle. Take a look.
If you think about like when market meltdowns happen in equities, and I sit on the boards of some entities that invest in private equity and venture capital, and a really interesting thing happens. So public equity markets COVID happens, they wipe out, it's complete bedlam. Private equity and venture capital don't move that much. It's kind of odd. Like they kind of just don't move nearly as much as equities. And that's because their cadence is much slower. They tend to mark quarterly. They have more time to absorb information. Crypto is to public equity markets what public equity markets are to venture capital and private equity, in that it's so much faster. It's so much more transparent. It operates 24/7, near instantaneous settlement. So what I would offer to you, and I'm not sure if this makes people feel better, is what they're seeing in crypto is the reality. They're not seeing a watered down version that shuts down at 5 o'clock every day or prices quarterly. I would rather know what my mark to market is at any one point in time than have that sort of hidden by a slow cadence.
So that being the case, and obviously this is all in reference to the most recent liquidations that we saw in the market, and part of this is really how tokenization, how the shift of Wall Street is really underway. So we wanted to bring on an expert, that is Jamie Coutts, who is the chief crypto analyst over at Real Vision. We've had Raul on before. So Jamie, welcome in. Appreciate you coming in.
Oh, thanks for having me, Paul.
All right, so let's get into a couple of points real quick. First up is I want to hit on this tweet right here. BlackRock's CEO, Larry Fink, says it's only the beginning of tokenization of everything. So we're going to see money, property, RWAs are going to hit in here. He calls it a major opportunity for BlackRock, saying that the plan is to move beyond traditional finance as a system and really kind of repositioning the entire ecosystem of Wall Street. When you look at that right now, is there an appetite? That was the Coinbase institutional team they're talking about there. Is there an appetite for this kind of market right now where we'd have 365, 24/7 liquidity, active markets? What are your thoughts?
Oh, definitely. I tend to take what Larry Fink says quite seriously. So when he says that he wants to tokenize financial assets and put them on chain, and he's talking in grand scale, I think he actually means it. And the reason why these large Wall Street firms are sort of salivating at the opportunity, at least those ones that are progressive, is that it opens up capital markets and the potential for greater profits. They see an opportunity to disintermediate a lot of the other financial players in the existing system and be right at the center of this new system. So whilst they're still, they are giants in their own right in the traditional system, they're progressive enough to see that this new infrastructure allows 24-hour access and opens up capital markets to more investors. And I guess there's more utility of financial assets on chain with being able to use it as collateral and do more things with it. And they're just trying to get in first. So I certainly believe that is the intention.
Yeah, well, I think, when you look at BlackRock, obviously they're kind of the center of the universe as it is right now. I think their position is they don't want to lose that because they see the velocity in which these markets can move. So I guess kudos to Fink. He kind of understands what's going on. So it is definitely playing into it. Hey, I want to go to a tweet that you had in here. This was kind of an interesting point. Crypto market was far from euphoric going into this epic crash. A couple of points you hit on is exponential adoption of blockchain infrastructure that's going to touch every industry, kind of to what Larry's talking about. But this point right here is the great debasement. Watch the policy moves from the central planners. I love the Spice My Flow reference there in where this is going. But Bitcoin is the king, SOV, and dominant as far as L1s for exponential growth. Do you think retail is understanding what's going on right now? Because there is a major shift happening in our monetary system.
Yeah, look, I think in terms of whether retail is understanding the debasement story, yes, it's still, I would say it's not as widely known as it should be. Otherwise, Bitcoin
Right.
would be worth $10 trillion today or $20 trillion today. But, we can see the zeitgeist is shifting. Number one, this is an asset that was only investable for the plebs, for retail, for the workers, and it's grown to $2 to $3 trillion by just through grassroots adoption. Now, institutions are starting to work it out, and the irony is that the greatest debasers in our economy today, which is the banks, 90% or 80 to 90%, depending on your economy, of all new currency that's printed is printed through the traditional banking system. The irony is that the great debasers themselves are calling it the great debasement trade. I don't think they fully understand the irony of that statement and what they're saying to their clients, but nevertheless, here we are. Welcome to the party, guys.
Yeah.
So I think it is starting to become more widely understood. The cost of living crisis after the COVID calamity, I think brought that to bear for more and more people, and it's only going to pick up steam. I mean, there are elements of what's going on in the debasement trade, gold and silver, for example, that look extremely overheated and due for a correction, which would be natural in the course of things. But I think you look at these debasement trades taking decades and the trajectory that the debt cycle is on, the falling workforce, and the gap between GDP growth and debt, which can only be met with extra liquidity, more debasement. I think it's only going to go, up and up from here, but there's going to be some very large swings, in the meantime. So yeah, I think it's starting to pick up speed.
How do you play what's happening with Trump's administration right now? These erratic moves. We saw obviously the one that kicked off the most recent epic, shock to the market. Trump basically says the U.S. is in a trade war with China. This is just happening yesterday and today. And then, of course, China fires back, says it's planning to work with the United States to find a solution on trade. So we're continuously seeing these models in which the system gets shocked because of tariffs and these threats of tariffs. And then, of course, you see Wall Street and the crypto markets responding. And we even put up a poll here where people were concerned, is the Trump manipulation continuing to dump crypto? This is the question, is are they willing to say that Trump is still good for the market? How do you play this out? Do you look at this administration being a key driver or more of an antagonist?
In terms of crypto, it's still major driver. The sea change that took place with the Trump administration coming in with a total change of posture, a administration which has people in place that are specifically looking at driving technological adoption of AI and also blockchain technologies is monumental. The regulatory changes and now the legislative changes, which I would say are half done. There's still a major bill that needs to get through, which is looking a little bit more difficult than the Genius Act, but that is an essential part of that legislative framework that needs to pass soon. And we just saw, obviously, we've come out of this liquidation event, and that's why a market structure and proper rules and regulations for the road for a lot of these exchanges needs to be enforced. But to go back to the question, is the Trump administration good for crypto markets or the asset class? Overall, yes. But I mean, let's be realistic about what we're dealing with here. We're dealing with the US empire, which is now $38 trillion in debt. There's constant government shutdowns. The debt is growing at twice the economic growth, and you've got a populist government and a populist president who is volatile by nature. All of these ingredients put together increases volatility overall, and it's where we are in this, what you want to call a generational change or the fourth turning or whatever it is. It's just it's really a part of the equation. But the important thing for everyone that I try to drill in to my subscribers at Real Vision is that there's two basically large secular trends. There is the debasement of currency that will likely only accelerate until we get to escape velocity with AI and new productivity that comes through. So there's probably 3 to 5 years in that time frame. And then there is the adoption itself. So technology growing at 100% compound growth rates, whether it's the number of users in crypto, whether it's the number of transactions, whether it's the settlement values, stable coins, collateral levels, all of this stuff is growing at such a fast compounding rate that you've got a hyper fast growing technology. But that also invites, with, as your last guest said, hyper volatility in and of itself, because it's liquid, it's trading 24/7. It's not like other asset classes. So overall, I'm very, very positive about what the Trump administration is doing, but you have to match that with the personality of Donald Trump himself, who can do some pretty wild things.
Well, I mean, it's natural for crypto. I feel like this is feels like this guy was born for crypto in terms of the craziness that he's bringing into the market. Because of course, if you saw what happened in 2021, we've seen everything from Luna to Celsius, you name them out there in terms of the craziness. Now you've got Binance founder CZ hitting on this. Maybe we haven't hit, and this is happening after Binance and Hyperliquid. Just as a reminder, they were going at it over the weekend about this shock to the system. But he's hitting on it right now, saying that we're not even in the real bull market yet. What is your opinion on it? Would you agree with CZ or no?
Yeah, I don't know what time frame CZ is referring to, because a bull market, what we've got is a structural secular bull market in these assets, but we've got cycles. So he's probably referring to the cycle itself. So I'll interpret it that way and answer it that way. The cycles for crypto, which from the outset was deemed to be determined by the Bitcoin halving, is actually very much tied to and a result of the debasement or the liquidity cycle. So liquidity and the debasement in the economy picks up speed and slows down depending on, I guess it's really tied into the debt of governments and when they have to refinance that debt. And that debt refinancing cycle, which is the crypto cycle, which people sort of look at as the 4-year cycle, the Bitcoin halving cycle dressed up, is roughly sort of 4 years. But everything changed in COVID, because when interest rates were brought to zero and they shut down the whole economy, the US government started to borrow at a longer maturity, and that sort of extended the cycle. And what that means is we are of the view that Bitcoin and also crypto in general hasn't topped yet for this cycle, because we still think that the economy is about to start to inflect up, and there's probably more liquidity to come into the system before they have to tighten the screws again like they did in 2022. So we saw obviously they're cutting rates. Now, cutting rates is bullish for liquidity, but it's not as important as what the central bank does in and around bank reserves and quantitative policy. And they've been tightening really since 2022. Yesterday or the day before, I believe, I think it was Powell, came out and said, look, they may end QT. And that was the first real indication that this policy is going to end. And that's liquidity positive. It's not the same as QE, but it is a signal to the market that things are starting to get tight in the financial system, sort of behind on the bank reserve side. It's not necessarily what we see, but in the financial system. And that just, I think, is another reason why I think there's still more room to go, because there's still more liquidity expansion. But the problem is there hasn't been as much liquidity pumped into the system because of the over-egging it they did in the previous cycle. And so everyone's very upset that crypto hasn't done as well. And that's where you've got to be very discerning about which assets you invest in. That's why that tweet was referring to high-quality L1s, because that's a settlement layer of the new financial economy.
Well, and if you look at that, obviously we'll take a look at a handful with Ethereum and Solana, but I want to go into this point right here, and I kind of agree with you. I think this elongation that we're in right now in terms of the liquidity cycle is unique. It's a unique condition that we haven't seen before. Obviously, Trump's administration injects even more into it because of what they are doing from a tariff side of things. That changes the economic structure of what we're seeing here in the U.S., which usually has ripple effects globally. But when you flip over to outside of Bitcoin, and let's move into just quickly over here on what MetaMask is doing, because they've launched now Hyperliquid powered perps on MetaMask Mobile. So this is another layer of the ability, at least for most people, because like you had mentioned earlier, us plebs that are beginning to play these markets, these kind of tool sets have never really been available to us. Now they are. What is your opinion of how we're seeing leverage being used in the market right now, especially with this news with MetaMask? Is that a good thing or a bad thing?
Yeah, I'm conflicted on it because the build up and leverage is inevitable because momentum feeds momentum, and that usually ends pretty badly for everyone. So whilst I love the access to products and the access to new tools for everyone on the planet, including people who are outside the West, who can now simply spin up a wallet and get access to a digital asset that will protect them from the ravages of inflation at home and abroad. There's definitely two sides to that equation with the extra leverage that comes in, through these products.
Yeah.
But I think it's a reflection of the financialization of the global economy. Sports betting, gaming, these are all sort of social phenomena that are only expanding. They're truly growth industries. Crypto sort of ties into that in a certain way because people do use it as either an escape, either as a form of entertainment, but they also use it obviously to try and dig themselves out of the mess that they're in because of the debasement and what governments are doing with the money printing and all of the other policies that we're subjected to. So it's a double-edged sword.
Yeah. Well, and I think that's the key is you look at this leverage that we saw obviously within the market, largest correction that we've seen ever in the history of crypto. But at the same time, traditional markets really didn't see that much of a drip, and neither did Bitcoin or even Ethereum to a certain extent. And if you look at the two majors, and I want to get back to the question on whether or not tariffs have hit this altcoin cycle in a big way or if this is just elongated out. The one reason is typically in altcoin runs, it's usually led by Ethereum. And a comparison is between what's going on with Bitcoin and Ethereum. You've got to look at the two champions of this, one being Saylor around what's happening with MicroStrategy. And now you've got Tom Lee coming in from BitMine, who is a digital asset treasury that's really stoking the fires on ETH. I want to play a clip for you, and then I'll get to kind of your opinion on whether or not ETH can make it into a position to move forward in the alts. Let me go to that clip.
Tom Lee has emerged as probably the most visible, influential spokesperson in the entire Ethereum ecosystem in a matter of months, maybe a matter of weeks. What does that represent? Well, first of all, they have $10 billion of capital. Second of all, Tom Lee is part of the Wall Street establishment. He was never part of the crypto establishment. You saw Wall Street merges with the crypto economy, capital flows because it trusts Tom Lee. And then the next thing you know, you have Tom Lee having conversations with the early Ethereum entrepreneurs, with the Vitaliks of the world, and the like. And what's interesting there is that entire movement becomes commercialized, institutionalized, legitimized, rationalized, becomes a bit older, a bit more credible.
All right, so I think that was a nice way of saying you respected Tom Lee. You never know with Saylor.
Well, I was just going to say, look, he's definitely got his facts wrong on Tom Lee coming into crypto recently. Tom Lee was the person who changed my mind back in 2018 in the bear market. And his whole company pivoted to crypto and he lost a ton of clients because he was talking about crypto in 2018 when no one wanted to touch it. But nevertheless, it was a complimentary talk, I would say.
You look at that and just at the ETH reserves right here, this has continued to fly versus ETH ETFs. So my questions to you are twofold. First, do you think the ETH DATs, the digital asset treasuries, are going to continue this trend right now in terms of outperforming the ETFs moving forward? What are your thoughts?
Yeah, that's a good question. I think it's going to be. I think they'll probably outperform, but I don't think the trade is as straightforward as it seems. I see MNAVs compressing. I think there was a time in this market when these DATs really started to explode on the scene with first mover advantage, where MNAVs were fat or expanded, like trading several times over the NAV. They gave them the leeway to issue a ton of equity to buy more of the underlying asset. So I think the leverage on the Ethereum and some of the other digital asset companies is such that yes, they will outperform ETH, but because they've got a productive asset as well, so they've got a yield,
Right.
so that is going to be attractive, and I think that alone gives them an edge over the ETFs. Maybe some some MNAV expansion could be possible as we get through the rest of the cycle and things improve into early next year. But I don't think personally for me that the DAT trade is going to be as compelling as it was earlier this year.
Interesting. Okay. Because of that, we've got Solana and even SWI who are setting up in a variety of different ways. Do you think that Solana needs a Tom Lee type, to go out there and kind of champion its whole position?
Well, there is essentially an equivalent, but he doesn't have the same stature outside of crypto. So the CEO of Multicoin,
Multicoin Capital. Yeah.
within crypto circles is very, very prominent, and is definitely increasing his visibility outside. But he's not the same as Tom Lee. Tom Lee was JP Morgan's equity strategist for like 20 years. So yeah, potentially. But look, I mean, this is this is an L1 with a smaller overall base, and so it's going to attract new people in time, and I think it's going to have the same sort of notoriety or popularity on Wall Street eventually. There is definitely cheerleaders of the Solana ecosystem from guys like Bitwise, like Matt Hogan, but of course they're talking about it from the perspective of selling products around it. But look, I don't think I'm personally not a huge fan of the personality cults that arise in the space, but it's human nature and it's natural to see it. So I guess it would be good for Solana, but I don't think it's needed. Like, you look at the numbers and look at how the ecosystem is growing; they're doing extremely well, and those ETFs will likely get approved in the next couple of weeks, and then we'll start to see retail flows flow in, and we'll have our third major crypto asset or crypto network accessible to everyone through US ETFs.
Yeah. Well, and I think the point you have to look at is for the next wave of adoption. Now, if it's institutional, sure, I don't think a salesperson, so to speak, is needed out there. But once you get into private offices, you get into high net worth individuals, businesses holding assets, which are all going to be coming down. Then you get into, of course, retail. They need, a Jensen, they need an Elon, they need a Mark Zuck, they need that person that they can kind of point to in this new, fangled thing called crypto. And Tom Lee is right now, and I think Michael does Saylor does the same thing. He represents Bitcoin very well. So I think Solana needs someone, man. I don't know who it's going to be, but I think they need somebody, or Solana needs someone going forward. You got this news right here. Solana is now live on the Uniswap web app. So that means that you've got an ETH ecosystem now starting to suck in a little bit of the Solana traction right there. So this is the point I'm getting at, is with all this competitive nature within the market, it feels like we've got to have, these people out there championing these chains for sure.
Look, it doesn't hurt, provided the person who's championing the ecosystem doesn't represent sort of or hidden risks, right? So the thing I always worried about with Saylor is, and I love Saylor, is that he becomes such a key person that he himself becomes the risk. At the moment, that's not the case, because he's been a champion. He's been so influential and prominent in a way that's really grown the Bitcoin the Bitcoin knowledge and understanding and accessibility. So for now, it's not an issue. but yeah, I mean, what was interesting about what you just mentioned there with Uniswap is a sort of a thesis that I've been building for a little while now, and other people have been talking about it, but I haven't started to shift any of my sort of investment decisions towards this thesis. But when you look at a Uniswap, is an application. It's now built its own chain. Mm-hmm. It's now doing cross-chain swaps. My view is that in the future, I think you're going to see the abstraction away from the abstraction of chains from our thinking when we're dealing with crypto. We'll think about the product. We'll think about the business that's in the ecosystem, whether it's a wallet or a specific action, whether it's lending or credit or swapping, like with Uniswap. And because they'll be multi-chain, they will be the chain discussion becomes less and less prominent. We're not there by any stretch. This is probably a decade-long sort of evolution of the ecosystem. But the infrastructure shouldn't be that interesting if it works and if it has the characteristics of credible neutrality and decentralization, and it's fast and it's cheap. Then we start to think about sort of business on top of it. But I mean, hasn't been playing out, right? That hasn't really been playing out in terms of an investment thesis of like buying the DeFi applications versus the L1s themselves. But I think in time, that's where I see the market evolving, and that was a great example of it.
Yeah, I want to revisit your tweet here because this is very interesting. Debasers start pitching the debasement trade. All right, so to clients. So this is talking about big capital. Explain to me what would actually make this happen. Do you think they're doing it now? Do you think the Wall Street guys are out there really getting in and doing this today?
Well, yeah, it's evident they are. They're sending around research notes using the term the debasement trade, and a famous fixed income fund manager was talking about it as well. So it's percolated up into the consciousness of Wall Street. Now, I've worked in Wall Street, so I always pause when I start to see the obviousness start to be expressed in the large Wall Street companies in terms of how they're pitching or selling something, and that usually has a timing impact which is dubious. Like, are we sort of near the end of the trade? Have they positioned early and now they're sort of flogging the same trade to their clients as exit liquidity? That's just my sort of cynical sort of perspective on everything. But I don't think it's the end of that trade, even though in gold and some of the other precious metals, which are debasement assets or anti-debasement assets, I should say, things are looking extremely heated, and positioning is at levels which I would be warning some caution on. But in terms of Bitcoin, that's certainly, it's not overheated, and I don't think that trade is over. But I think it's interesting that it is starting to now to get, it's the terms that we've been using for a decade to describe what is happening is now being used at the highest sort of echelons by Wall Street companies. And that just tells me that I think the zeitgeist is shifted.
Well, and I'm in agreement with that. The interesting thing to me, though, is this demographic that we're dealing with now is quite a bit different. It's no longer the boomers and even the Gen X's, my generation, that are dealing with that position right now. Now we're talking about millennials and eventually what will be Gen Z. They've already the ship has sailed. They're already down the debasement trade model pretty significantly. So I don't know if they're going to be paying much attention there. I think they're going to be watching ETH. They're going to be watching a lot of these L1s, and how they play into this altcoin market and whether or not we get a run on this. I want to close with the question that we kind of opened with, and that is the future of an altcoin season. ETH hasn't necessarily had its day in the sun. Bitcoin, based on a lot of analysts, still think there's a lot left. Tom Lee's out there pushing like crazy. Do you think that ETH is going to lead us into the promised land in terms of an altcoin season around these L1s? Solana, Avalanche, SWI, you name them.
Well, I mean, if you look, there are a couple of other L1s that have done, really quite well. Like if you look at BNB's all-time highs, Tron, essentially just a one use case chain, and is not credibly neutral like other chains. But let's just say the large L1s, have done a little bit better than ETH, but ETH has been outperforming in the last sort of 6 months.
Right.
So what I've been discussing through really this entire cycle is that this cycle was always going to be different because the type of investor coming in, even though it's been a slow drip so far, is a more discerning investor, being the institutions. The institutions move the capital. Yes, there's been DATs on lower quality assets, but where did they start? They started at Bitcoin, Ethereum, and that is because, Solana, and there's even been BNB. There have been ones in the lower tail as well, but they're not sort of at the number 200 asset. It's more like the number sort of 10 asset.
Right.
It's simply a reflection of which assets have product market fit and have users and have activity. Because that is the signal that this asset is going to last 2 years, 5 years, 10 years down the line. It's already showing that people want to use it, and it's generating cash flows off the back of it, which are returned to validators, which make the economic investment in that network a worthwhile investment in the first place.
Yeah.
So, it's people have to be discerning and focus on the assets that have the users and have the activity. And so it's been a very narrow altcoin rally or altcoin season, if you want to call it that. I think the broad-based rally that we saw in the last bull market is not to be repeated. There is a lot of inflated, no PMF coins and assets out there that need to essentially die. And there is a lot of attention being diluted through these other coins and into NFTs and all sorts of other sort of degen activity on chain. And that ultimately, whilst they could pump and provide short-term returns, is extremely hard to pick and won't deliver long-term returns. So Wall Street comes in, looks at these assets and go, right, we know this is the future of finance. How do we invest? Well, we invest with the models and the thinking that has served us well in traditional finance, which is, where are the users? Where are the cash flows? Here are the L1s that are actually got millions and millions of transactions every day with real viable applications that are profitable, like the businesses inside the economy are profitable. We'll invest there. And so the number 12, number 14, number 20, number 50th L1 that's competing is not going to get a look in. And that's why that tail feels so terrible. And that's why the breadth in the rally in this cycle has been so narrow.
Yeah. Well, and it's also, I think the stack is changing, because it used to be mostly crypto native that was really causing the stack to move in terms of how we saw altcoin season react, which was, in 2021, these blow off tops, these big, huge runs. Now it's a different dynamic. You've got Wall Street playing into the game. They're influencing a lot of people now, which is the bigger play, I think, is the influence on the network effect on many of these L1s that you're mentioning. So I'm in agreement with you there. Hey, Jamie, we got to get you back on the show. I love to kind of pick the brains of people who are really diving in deep on this, because understanding where this market is going is very important right now. This might be the most critical time of getting into something early, because we are setting up for a pretty big run here. So thanks for coming in today. I appreciate it.
My pleasure, Paul. Thanks for having me.
You bet. All right. You guys make sure and join the Diamond Circle. That's our own private group. You guys can jump in very easily. It's free. We'll leave a link down below. Catch me out there on X, @Paul Barron. We'll catch you next time right here on The Paul Barron Show.